All right, what's going on, everyone? Welcome back to another episode of Wall Street Rundown. I'm your co-host Billy. I got Wale with me. What's up, Wale?
What's up, everyone?
Yo, it's an end of an era, man. Jerome Powell has delivered his last sermon, I'll call it. It was a mix of emotions, of course. Like a lot of people just, you see a lot of people posting, Jerome. I know he's not leaving the Fed, like leaving. I think he's probably still going to be on the board, but man, oh man, to see that guy, I think he started in 2018 to now. So it's like we all have gotten used to see his face every, FOMC, whenever there's a talk about Fed and all this stuff. So it has been a journey for him, man. So we wish him all the luck, man, all the best. But I don't know if he probably left us with some, if you look at the chart from when the time he took on the job to now, the stock market is like it's all time high, basically. You know what I mean? So from 2018 to now, he has done a good job navigating us through COVID, doing navigating us through all these different crazy recession talks and inflation talks that we had. So again, shout out to Jerome, man. Wish him all the luck, and we'll see, man. If the new guy gets confirmed, man, that's gonna be another person to kind of get used to see exactly how they're gonna navigate the market and stuff. So Wale, man, I don't know, man. How'd you feel about Jerome leaving?
I'll be honest, I will say that he is probably one of the more vocal Fed chairs that I have seen throughout my time as an investor.
Yeah,
For a lot of people who started trading in like 2020 and started getting into the markets, all they know is Jerome Powell.
Jerome Powell. Yep.
But I remember Ben Bernanke when he was Fed chair, and I also remember Janet Yellen
Yelling, yelling.
when she was Fed chair.
How about Greed Alspan? You remember
So
Greed?
Greenspan was in the 90s, I think,
Yep.
and I don't remember much of him because I was too young.
Yeah.
But
Yep.
I remember Bernanke because Bernanke was during the housing crisis, and I started my financial advising career like during that time, and I started
Yep.
like getting into investments in like high school. So I remember him as Fed chair, and he had a tough job to work through.
Man.
I think Jerome, COVID was something that nobody had ever seen before.
Yep.
And that was very hard to navigate. And I will say the speed at which the Fed was able to stop the bleeding did help to a certain degree.
Yep. Yep.
But the byproduct of that was we saw inflation that we hadn't seen since the 70s. Like that was the byproduct. And then having to navigate from where that was to where we are today, I will say it wasn't perfect, but he did a good enough job to the point where it didn't linger for too long.
Yep. Yep. Yep.
So he was a little late, in my opinion, in raising rates. But outside of that, you know, I would say he did a pretty good job. Now I'll give you these statistics. When Jerome was sworn in 2018, SPY was trading at, or SPY closed, this was on February 5th, SPY closed at 263.93.
Look at
We
West
are
Spies.
we are now at 711.50-ish. So you're
Mm-hmm.
talking about 169% return over that time frame. QQQ closed at 158.12 and it closed today at 661.57. So you're talking about a 318% run during his term as Fed chair. So if you put a
That's crazy.
$10,000 into the market, you'd have $41,000 in QQQ and you would have 26,000 in SPY. Now this doesn't include dividends, fees, and all that stuff. This is just
Yep.
pure net asset value growth. So I'm just you know, he leaves a legacy of complexity. And even though he was criticized by a lot of officials and things like that, I think one thing that I will say is he did a good job of trying to maintain full employment.
Yep.
But the price stability to me is something that still needs work right now
Yep.
because,
Yep.
but there are external factors like the war that he can't control.
We can control that.
He just has to play with the cards that he's dealt with. So, I will miss his vocal aspect about things. And what I'm trying to I think what I heard is I think Kevin Warsh doesn't want to do press conferences because
Interesting.
That's not something that they have to do.
Interesting. Okay.
So we'll
He
see.
doesn't want to. He doesn't want to answer questions. So I don't know, man. That kind of makes me feel like he's gonna do some. He's gonna be doing some crazy stuff.
I don't know. I don't know how what his approach will be. They asked Jerome if he can give him any tips or any suggestions. He's like, it's up to him. He's the Fed chair.
Yeah, he can. He
But
can.
I will say this though. We always have to remember that one man doesn't control rates. The
Right.
committee votes.
Committee votes. Yep.
And the goal of the Fed chair is get the committee on one page. I
Yep.
mean, that's how things are supposed to work,
Yep. Yep.
So we'll see how things run. But we'll get into this later. But there were some interesting things said during that meeting if you read carefully about the four members that dissented. So
Yep. Yep. Now, with that being said, man, let's do a quick recap of the market today, Wednesday, April 29th, 2026. We have some mixed performance, absolutely. As investors kind of, we're trying to navigate this high stake featuring Federal Reserve interest rate decision. And also, we had a lot of reporting today, like the Magnificent Seven, a lot of them reports today. So the major market indices, Dow Jones fell about 280.12 points, which is 0.57%. S&P slipped about 0.4%, finished at 7135.95. I mean, it's just way down, but the whole oil prices and all that stuff that's happening right now. The NASDAQ managed a slight gain, 0.4%, ending the session at 24,673.24. So again, we had a little bit of good close day on the NASDAQ. And if you see the NASDAQ right now after hours, that thing, the futures is up there with all this reporting that we just had. Some of the key market drivers, Federal Reserve updates. I mean, they held rate steady. I mean, I don't think anybody was surprised with that, as expected. Again, we have inflation still persisting, and I mean, I don't see any cuts unless if this new Fed comes in and decided to do cuts anyway. I just don't see any cuts on the horizon. Some of the big tech earnings, Alphabet, Amazon, Meta, and Microsoft report result after the bell. Um, Even though they all kind of surpass expectation, almost all of them, Meta kind of dropped like crazy. I was shocked about that. Their numbers wasn't bad, but they just drop. But again, they're spending a lot of money too, like on AI and stuff. So they're putting a lot of money out there. Geopolitical tension and energy also, the crude oil surged about 8% to $108 per barrel. We crossed that $100 again. So again, this whole geopolitical thing is going to keep affecting the market, regardless of whether we like it or not. It's going to keep impacting the market. Some of the notable stock moves that I was kind of watching on is look at Starbucks, y'all. Go look at Starbucks. Starbucks up like 9%. Store sales was crazy. So I don't know. Y'all here drinking all that coffee. Something's happening at Starbucks, y'all. But and then you got Calv. We saw 38% on the news that Italy Chizzy Group will be acquired by the company for 1.9 billion. That's another stock that I was looking at. I was like, whoa, where did that come from? And then our beloved Intel, man, rose 12%, continue its recovery from a previous sell-off as semiconductor sentiment improved. And then finally, go look at Spotify, 12% drop after the quarter result that led to multiple broker price target cuts. Like, Spotify is not doing good. So again, we shall keep an eye on all those companies that reported after hours. We're gonna see how the market opens tomorrow. Like I say, a lot of those reports weren't as bad, but we see some mixed reaction there. So let's talk about some of those earnings, Wale. Microsoft, Amazon, Meta, Google, BE, and STX.
Yeah, so let me just run through the numbers really quick. Let's start with one of the big ones, which to me is one of the ones that has a lot to prove was Microsoft. So if you look at Microsoft, they had a revenue of 82.9 billion, EPS of 4.27 per share. Both estimates were beats based on consensus. And guidance for Q4, 86.7 billion to 87.8 billion. Azure growth. So Azure growth is the business that people tend to focus on the most when it comes to Amazon. I mean, not Amazon, Microsoft. And they said that they're expecting 39 to 40% growth, which is above what Wall Street projected. Now, I will say this, though, the CapEx is high. $190 billion in 2026. So maybe that is what people were hesitant about. I didn't see anything bad in the report. It dropped a little bit, but now it's starting to stabilize. We'll see where it closes. But I think to me, Microsoft has, is one of the companies that has the most approved because again, to me, Copilot is one of the bottom tier, AI large language models that is used. And then also too, they've got a lot of competition in their space now. Let's move to Amazon. Amazon numbers were also good. 181 billion in revenue, 2.78% EPS, which were both beats, and they guided to Q2 revenue of 194 to 199 billion, which was also above estimates. Their capex also maintained intact at $200 billion that they plan to spend for 2026. Now, the one thing about, I would say, Amazon and Microsoft that I think investors are worried about is when do they start to see accelerated growth with all of the money that they're spending on CapEx? And I don't know if there's a clear answer to that just yet. We're seeing, I think you mentioned this last week in our last call. Microsoft is buying some people out and they're trying to get rid of some of their older employees. And they're offering, buyouts for people. So you can see that they're starting to cut costs to kind of make up for what they're going to be spending on CapEx. It looks like Amazon did recover in the after hours and they got up to 277.12. So that looks like they're moving higher. And then we have Google. To me, Google was one of the, to me, they had the best report. And to me, they're the most diverse and the biggest name in this build out when it comes to the hyperscalers. 109.9 billion in revenue, $5.11 in EPS. Both were beats. And we're looking at guidance for CapEx. Apple raised its CapEx guidance to 190 billion and spent more than 35 billion in Q1. So even despite that spend and keeping their CapEx pretty high, it looks like they're executing on all fronts when it comes to what people are expecting. Because if you look at Google Cloud revenue jumped 63% and cloud operating income tripled to 6.6 billion. So they're one of the companies where we're starting to see the return on investment with their spending because you're starting to see accelerated growth in the cloud and also too in their operating income. So yeah, when it comes to all of these big names, I think I said this in the last show, I think Google is probably the best and cleanest name to be in at this point. Meta, we look at Meta's numbers. I think they were also a beat. Revenue 556.31 billion. EPS was 10.4. Now that did include a 7.31x tax benefit. So that might be the knock on their EPS numbers. They were both beats. And they said that their CapEx is still going to maintain between 125 to 145 billion. Actually, no, I take that back. They raised their CapEx from 115 to 135 to 125 to 145. So that might be why the stock was down in the after hours. I don't know if it recovered yet. Let me take a look. And no, that stock is still down in the after
Still
hours.
down,
So
yeah.
yeah, the one thing I will say about Meta is they're never shy about spending, but sometimes they don't have what I call disciplined spending. They don't have this
that's $70 billion on
on the
that's
metaverse
crazy.
or $80 billion on the metaverse. Yeah.
Yep.
Facebook does not have disciplined spending. That I will say as a company. We've seen their history. They're not afraid to spend. Zuckerberg will write those checks, but yeah, I think investors are getting a little bit, you know, shy about that because I think this is the second or third time they might have increased their capex spending.
Yep. Yep.
So,
Yep. On
and
top of
that,
that, also they fired what they got rid of like 8,000 people, I think, last week or something like that.
yeah. So, and they're getting
Um,
rid of people as well too. So, and then the last two names that are kind of, these are names that I wouldn't say Bloom has fallen flew under the radar, but these are names that don't get a lot of headlines. Man,
Mm-hmm.
Bloom Energy, which is the biggest holding in IWM, if I might add.
Yep.
Revenue 751 million, adjusted EPS of 44 cents a share, and then revenue was well above expectations. And they're guiding full revenue of 2026 to 3.4 to 3.8 billion. And it says that their 2026 revenue outlook moved up above 80%. So they're growing at a huge clip. And then we have Seagate, which is the storage company, the memory company. They have revenue of $3.1 billion, 4.10 EPS, and both were beats. And guidance looks good. Revenue guidance for Q4, 3.45 billion, which was above expectations. So yeah, I think both stocks moved really good. I think Seagate also moved SanDisk and WDC. But it's crazy that the fact that the memory story of AI was something that no one really kind of thought about, and now it's getting a lot of attention. And I might add, I think we talked about this offline, that it sounds like the CPU market might also be joining the AI story, which is adding to the run that Intel is having right now. And I saw that the stock is almost at $100. You're on mute.
I was gonna say that is nuts, man. We're excited when it hit 60, and now it's like over almost $100. I mean, that is some crazy numbers. But I think overall, I agree with you. Like, we did not anticipate the whole memory story to actually take place like this. You know what I mean? We thought a lot about energy. We thought about maybe storage, but not in terms of like storage like memory, but storage maybe
No.
like servers and all this stuff. You know what I mean?
Hmm.
But it is absolutely insane to see how those companies are running like that. You know what I mean? Now, is this all hype? Like, I don't know. Like, could there be
I don't
a
think it's
different reason? A different
yeah.
reason? I don't
I,
know.
I I can't call it hype. And the main reason why I can't call it hype is because when you look at the hyperscalers, they're still looking to spend money.
Mm-hmm.
Google might be the one that has the cleanest path to profitability and efficiency, but all the other names are not lagging behind when it
Right.
comes to spending on capex. And as we look at their numbers and what Wall Street is expecting from them quarter to quarter, they're exceeding expectations.
Hmm.
So to me, I think we haven't got to a point where investors are, I would say, afraid of what is coming out from this spending. I think
Yeah.
people still see that it's still needed. Now, I will say when Anthropic, Open AI go public, that might change the sentiment a little bit because some of the information I'm getting from Open AI as far as like their cash burn is just nasty. It's disgusting. Like
Hmm.
it's not efficiently run. And I heard that Anthropic hit $1 trillion market cap. So when they go public, what's their market cap going to be? So that's something that I think might change in the future. I don't know
Yeah.
for
Yeah.
sure, but when those two companies become public, maybe the narrative changes. But right now, I can't call it hype, man. I can't call it
Yeah.
hype. I
Yeah.
think everything is kind of just moving as expected, in my opinion.
Yeah. Yeah. And I mean, the story's still intact. You know what I mean? Like, when it comes to like the whole story of AI, I think it's very, very intact. My only thing is, um, are we really excited about SanDisk that makes those little memory
Yeah, that
chips?
I
You
don't
know what I
know.
mean? Like,
Yeah, I don't
are
know.
we is that really that important? Like, is there other companies that should be participating in the whole memory story? I don't know. So
Yeah.
again, they make things that AI is needed for. Like, I mean, we talked about generators. Generators
Hmm.
are right now, a lot of companies, generators are sold out. Like, I'm talking about like the industrial generators, they are sold out. Every single piece are spoken for. Like, companies already paid for like years or worth of generators already. So some of those companies that like I make generators. I mean, I think we mentioned a couple of them already. Is it
Generac is the one that I'm familiar with.
Generac? Yep, Generac. It's the most direct AI energy growth story. They produce like commercial industrials, and their sales jumped by 28% just this year. You know what I mean? So it is crazy the story of like the whole energy thing. And so I was listening to this podcast also. They were speaking about how the energy can actually be cheaper for all of us. But the problem is a lot of those data centers are money hungry, right?
Hmm.
So they want to be off grid so they can run 24 hours, 24/7. They can make as much money as they can. As opposed to if they come and sit on the grid that we are actually on and be able to kind of rotate through a lot of think about it. They actually can offset a lot of the energy bills for a lot of residents, right? So the state charge them a lot of money to use energy. Like they pay a lot of money. So they could actually be helping in offsetting some of the energy bill for residents in the states, but they don't want that. They want to be in their own individual grid, so they don't have to worry about all this rotating power outages and all that stuff. So that story is still developing. And like as I mentioned, like generators are out. I think we're gonna roll through some of those energy that we already have. Generators. I mean, generators. You need something to run the generators. You need some type of power. So you need some type of power source. You know, generators they don't just run on like water, right? You have to put some type of ignition or diesel or something in there. So you still need some type of addition to it. So same thing with solar power. Same thing with the blade, the air power. So all there's the hydropower. Like you need all of those something to generate them. So I think eventually we will get to a point where nuclear will enter the story. I think we're kind of like on the sidelines still here and there, but we haven't really had a good break into the nuclear story just yet. But
Yeah.
the AI story is still intact, man.
Yeah.
Um,
I think that as we start to progress through everything, um, the one thing that I will say is I wonder if the data center need or like all the projects that people are trying to build online, if those projects actually come online when they're supposed to, or some get delayed or some get canceled. Because we've seen some that have gotten canceled, but for the most part, everything still seems to be good. So I just hope that there isn't a over build out when it comes to the infrastructure need for AI and stuff like that. So
yeah, yeah. I mean, the demand is there, so I don't think there's an overbuild. I think the demand is there. It's
yeah.
needed. It's very very well needed. I just wish I owned a data center because that would be dope. All you gotta do is set it up one time, and it's just a cash cow.
and
So
let it run itself.
yeah, yeah. I mean, a lot of farmers who have land that just sit there. They're leasing it or selling it to companies who build data centers on them. So that's a good way to make money too. But let's move on to the meeting, man. The Federal Reserve meeting today. They decided to maintain the interest rate in the target range of 3.5 to 3.75. I mean, we all expected decisions, right? It wasn't like nobody was surprised when this happened. Um, but again, just looking at how I don't know if that the whole energy trouble that we have right now in the Middle East, if that's have any impact just yet on inflation, because we haven't really seen that hit the books yet. So I wonder once that start hitting the book, maybe like next quarter. I don't know. I mean, how is that going to change the perspective of the economy?
And I think that what we saw from the votes is that there are already members on the committee already preparing for that because it says this is the most the Fed has been divided since 1992. So one person was saying we should cut rates, and there were three members that did not like the language of arguing that the Fed should be easing or moving towards easing because they said inflation is too high.
Hmm.
I really personally feel, and I don't know if this is going to happen, I really feel that the market is getting the energy story wrong. to a certain degree. Now, I will say this. I don't think that all sectors of the market are affected, but I will say that the consumer sensitive parts of the market, those might be affected a little bit more. Like, I think we ran puts on airlines this week, and those turned out to be pretty good. I had calls in USO; those turned out to be pretty good. I think a lot of the travel names, like if you go look at CCL and LCH, you look at UAL, and I think airlines and cruises are going to have a hard time because I don't think that there's going to be a resolution to this thing anytime soon. And I think someone made a very good point and said, remember when Russia and Ukraine were fighting, everybody was thinking Russia's just going to obliterate Ukraine and it's going to be over quickly. Well, here we are, what?
Almost 4 or 5 years later. Four or
Almost
5 years
five
later.
years, 4 years later,
Yeah.
and they still fighting. Now, right now in the Middle East, we're not hearing about any fighting going on, but Trump said that he's okay with an indefinite blockade. And I think that's bad news for people like China. That's bad news for people in Europe.
Europe,
That's bad news for
Middle
people in
East.
Japan. If you are an importer of energy, you are in trouble if this does not get resolved.
Yep. Yep.
And if I'm not mistaken, USO has now broken above the level that like the high from the when the war started on USO was one, what was that? One, come on, load up. All right. That high was 143.98. Yeah, we had 151.63. And I don't see that slowing down anytime soon right now. I just don't. So,
Crazy.
I don't know if it's going to affect like the Amazons or the Microsofts or the Metas or the Googles, like the hyperscalers. I don't think are going to be affected as much possibly. Now, they will be affected if the Fed does raise rates. Everybody gonna get smoked if the Fed raise
Yeah.
rates.
Yep.
I don't know if we're there yet. Jerome says we're not there yet, but to me, I feel the committee is thinking about it.
They have to.
And yeah, and we're at $118 a barrel for crude oil. Yeah, this is something that I think the market is getting this wrong. And whether or not we start to see the implications of that anytime soon, I don't know. I can't say for sure. I cannot say for sure. So,
Yeah.
but
Yep. And I mean, it is kind of scary too, right? So we look at some of those implications. For example, um, the airlines are raising prices, guys. Like
mhm.
go look at the prices, man. It's ridiculous. You know what I mean? Now, I was reading some articles and they said that airline CEOs are actually happy. They said that airline prices haven't really adjusted to the level of inflation that was happening. You know,
Mm,
they say across the board, airline prices haven't risen as much as how the economy was doing.
mm,
So they think that this is actually a good equilibrium or a good disruption in the airline market to rate the price a little bit because consumers are gonna pay. I know nobody's stopping from traveling. People still traveling. Nobody's like, oh, if the price is too high, I'm not gonna fly. People are still flying. The demand is still high. So again, this going back to what I was talking about when it comes to groceries, the prices you pay for eggs maybe like 2 3 years ago, it's not coming back. It's not coming back
nope.
unless you go buy your own chicken and do your own eggs at home. Like it's not coming back. The same thing I really truly believe is probably going to apply for gas and also going to apply for the airlines. I don't think those prices are coming back. I don't think you're going to see a time where you maybe flying from California to the East Coast. um I don't know how much is it, but it's like that price is probably not going to go back. If it goes back, probably go back a little bit, but it's not going back to the level you think it's going to go back to. You know, unless if you have something like the pandemic shuts everything down, and then the airlines give you like $50 ticket to go to Hawaii. You know,
Yeah, I remember when
but
COVID hit, man. I took myself to Mexico twice.
bro, those prices were
Yeah,
amazing.
I went to Mexico in October and I went to Mexico in November.
Those prices were amazing. Even the resorts were empty. Like you
Yeah.
had the
Oh
best service.
man, such a good time because you have to understand some of those cities they run on tourism.
Yep.
Like they need tourism
Yeah,
to
need
function.
tourism. Yep.
Yeah. I will say this. The one thing I don't agree with what Jerome said is that the consumer is strong and they're spending.
We're using credit card, y'all. People are
That's
using credit card out here
that's
to
exactly what's
survive.
happening. And
Hmm.
to me, that is not a that is not a long-term plausible solution. I think people are getting overextended. I think the higher end consumers, they're fine,
Oh,
right?
they're making so much money. They're good.
But I think the lower end middle class consumers are the ones that are having to put basic necessities on credit cards now.
Yep.
And that's how they're getting their spending done.
Yeah.
Because if you listen to some of the credit card balances and the debt balances for consumers, it just keeps going up.
Yep.
Saving rates are going down.
Yep.
So this is not, this is to me, this is not a sign that people are doing well. I think you have to take that with a grain of salt.
Yeah. Yeah. And I'm surprised. And I'm surprised they would think that because I don't know what
See,
numbers they're looking at. I
I
don't know what
think
they're looking at.
I think they're afraid to scare people. I think they're afraid because
Mm,
this is how I look at it. If you're in California, right, and you're someone who drives to work to San Francisco 5 times a day, there's two things that have happened to you this year. Number one, your gas has gone up, and number two, your toll has gone up. Now, if you have not had an increase in pay to equal that, you're probably taking a deficit or you're taking money away from non-essential things.
yep.
So, like, I feel really bad for the people who have to drive to work every day because, if they don't have a choice, they don't have a choice.
Have a choice.
And, I think petroleum, like extensive businesses, trucking, cruises, airlines, all of those things, I think at some point they're going to really feel the burn of elevated prices. I will say this, and this might be crazy. If oil stays above $100 into the end of summer, I think at some point the Fed is going to have to raise rates.
I agree.
I think they're gonna have to.
I
And I
agree.
think when they do, market is cooked.
Yeah. I think so too.
Think the market is cooked. So, and I just based on what I'm hearing from what is going on in the strait, it doesn't seem that anybody is in any sort of rush to find a resolution. And
Absolutely not.
if the blockade stays a blockade, I just think that there are adverse consequences to that happening. So we'll
Yeah.
see what
Yeah.
happens.
Yeah. Nobody's in a rush at all. So again,
No,
I agree with you. Like I think we're underestimating the energy crisis that we have right now. We're underestimating the consumer, the pressure the consumer facing. We're underestimating a lot of those different things. Now we're not gonna say gloom and doom out here,
no.
but it's something to really, really keep an eye on. If it hits
Hmm.
a threshold where those numbers cannot be ignored anymore, I think the market might come crashing down a little bit too. So
Yeah.
yeah,
I wouldn't say crashing down per se, but what I'll use is that stocks will need to get repriced if things change. They have to
yep,
get repriced, right?
yep,
Because again, the institutions that are buying stocks and pushing stocks higher, they have these models they run. And they change the models from time to time based on what interest rate projections will be, based on inflation projections will be, based on what earnings.
yeah.
So when they make those adjustments and when the model spits out a number that's lower than where things are, stocks sell off.
Stock sell off. Yep,
So I think
yep,
that if this prolongs too long, that is something that we just have to keep in the back of your mind. So
yep, yep. Well, speaking of some of the economic calendar, man, we have PCE coming out tomorrow, and then we have GDP Q1 also coming up. So we shall see how those numbers look. Core PCE also is coming up for the month of March. So those are very, very important numbers. They all come up at 8:30. So we'll see how the market react to that. What do you think, man? Like is PCE gonna have any weighted at all on the market?
I don't know because remember PCE doesn't include food and energy.
Right.
So,
Just consumption, yeah.
it's consumption. So we'll just have to wait and see what that number comes out to be.
Yeah.
But
Yeah.
I am I am I'm not as optimistic as I was maybe like a couple days ago. But again, I think that I think not every part of the market will be affected equally. I think that the consumer side is the side that I would be a little bit worried about. And I think we already got our final, when's the GDP numbers start to come out? I don't have that on my wall, but GDP will be another tale when we start to look at um, what GDP starts to look like.
Yep.
So when we
Yep.
start getting those readings, that will be something that we will need to
Keep an
start
eye
to
on,
price
yeah.
in to see if growth is starting to slow down. So
Yep. Yep. Well, also a reminder, this is the last couple of days before April ends, man. Again, another month passed. That was a very, very quick month. I feel like we just hit April and now we are done. Friday is actually the last. Was it Friday is the last day of April? I think so. Yeah,
is it Friday?
it's Friday.
Oh yeah, Friday. No, Thursday is the last day of April.
Oh yeah,
Friday,
so Friday will be April
Fridays
May first.
is May 1st. Sheesh.
Hey, that is crazy. That is crazy. So again, this month is over. We're moving on to the next month. Again, for the month of May, the one of the biggest thing I'm gonna watch for is, I mean, the first week there's not like a lot of reporting. It's a consumer credit reporting on Thursday, May 7th at 3 p.m. That'll be a good one to keep an eye on, especially speaking of consumers and all that stuff. But other than that, I mean, the job openings with the jolt reports to see that comes in on Tuesday, May 5th. Sometimes every now and then that kind of have a huge impact on the market too. So that comes in at 10 a.m. So keep an eye on that one. That's next Tuesday. But other than that, man, there is not a lot of reports coming out next week. Didn't see if there's anything else. No, there's not a lot of reporting coming out next week. So as we close this month, Wale, man, like what should be the sentiments going into May? Like what should people consider? What should people look for?
Yeah, I think going into May, I know that we've hit all-time highs. Markets seem bullish. CapEx from the hyperscalers looks good. I think that as we move into May, I think you just need to start looking bigger picture. Um, because again, I I find it very hard that a global conflict of this magnitude can be completely ignored for an extended period of time.
Yeah.
And I think that you have to understand that that is still a risk to the global economy. So, with that being said, I think that you just have to understand that that's just something that can derail everything that we've seen, depending on how long it lingers. So, always say this as well is that if there is a pullback, we don't know the significance, we don't know when it's going to happen. This is when you start looking at names and things that could rebound in the future. Because again, I don't think these things last forever. They could last for an extended period of time, but at some point they will end. And when they do end, it's are you in a position to take advantage of what is going on? Because long term, I think we all understand that what affects stock prices is earnings. And we've seen earnings have been pretty good. Global conflict creates shocks for temporary period of time, right? But those things don't last forever. As
Right.
long as companies continue to earn and continue to do well, which I think they've done so far, I think that, if we do finally start to get rate cuts and inflation does finally start to come down, that's just going to be pouring more fuel on the fire. So,
Yep. Yep. Yep.
long term, I think things work out right now. I just don't know if we're going to be due for some sort of, reminder that, hey, there's still something going on overseas that's not resolved. Just making sure that you're paying attention and not falling asleep at the wheel.
Yep.
So,
Yep.
and I did see some VIX call buys today that I, paid attention to. Not super high, like what I think it was 23 was the
Mm.
highest I saw. So some people are still pricing in a lot of risk, but I always look at bond spreads, and bond spreads are what are going to tell me where I need to be. And right now, bond spreads are not reacting. Now, rates did go up today. The 2 year is almost at 4%. The 10 year is almost at 4.5, if I'm not mistaken. I think it's above 4.4.
Yeah.
If we start to see those things move higher, that could be a sign that the markets are going to be pricing in more risk. And I've already given you guys how to look at how that gets priced in and looking at spread. So, you know, you can't say that you didn't know.
Yeah, yeah. Yeah, you got to keep an eye on those. The one thing I'll say keeping an eye on is Kevin Ward's confirmation. I think it's supposed to come like mid-May around that time when Jerome leaves.
Mm-hmm.
So I don't know how the market's gonna react to his confirmation. I don't know what's gonna happen. I don't know. We don't know. But it's certainly I'm pretty sure it's gonna be a lot of volatility that time because I think a lot of people are keeping an eye on and seeing like when exactly he's gonna be taking off. But
And,
that's one of the
and
biggest thing I'll keep an eye on basically on May.
and I kind of hear, if I'm not mistaken, that he has an entirely different perspective on
Yep.
calculating
Yep.
inflation.
Yep.
So
Yep.
I don't know how that's going to turn out.
Those numbers might be looking a little different.
Yeah,
I'm
they might
telling
be looking.
y'all.
Yeah.
Who might get it? The report that's it. There's no inflation. We good.
Well, if you look at it this way, there's no inflation. Well, I
There's
guess
no
we can
inflation. We
we
good.
can we can cut rates to
Yeah.
zero.
Yep. I would
Amen.
not be surprised, man. I really would not be surprised if that's because yeah, you're right. He said the way we calculate inflation and all this thing is different. It shouldn't be doing that way. So I don't know, man. But in any case, keep an eye around May 15th when he gets confirmed. We'll see how the market react. Put that day on your calendar just in case you're trading that day. So yeah. Well, other than that, Matt, man, this is a wrap for me. You got any last minute stuff you want to talk about?
Nah, man. I think for the most part, I think we've covered pretty much everything. So I will say um, Wall Street was late to the Intel story, and I think they playing catch up now.
Man, they are playing catch up.
I think they're playing catch up now. If anybody gets a chance, and I'll be honest with you, I didn't think about this when I made my thesis for Intel, but do research on CPU usage when it comes to AI. Um, what do you call it? AI agents and
Mm-hmm.
CPUs. Go look at the story behind that because I didn't think of it at all.
Yep. Yep.
And it sounds like that could be a piece that plays a part in helping train AI agents.
Yes. And
And
guess
and
who's
guess who's
actually
the leader? Intel.
Intel. There you go. And actually, Mark Zuckerberg was talking about this, where his goal now, he's pivoting from the whole metaverse to agent. He
Mm,
literally wants to create an agent that every single person can have their own agent. So think about an agent that has access to everything you do, whether it's to be your calendar, whether it's to be your meetings, whether it's to be your kid's schedule, whether it's to be like your phone record, your phone, any of that stuff. And what he wants to do is instead of it being prompted, it needs to be able to prompt the actual person, which means that the AI is actually going to ask you questions and you go. Have you guys watched that movie called Her? Go watch that movie. That's literally what Mark Zuckerberg is going to do, where you have your own agent that basically knows your life and, be able to call and make reservations for you, be able to call and order food for you. You haven't eaten dinner today. What's going on? Because you want me to order your favorite, like all of those different things. That's literally what Mark Zuckerberg is trying to create. Now he's trying to merge that also with the metaverse. I don't know how he's going to do it, but we might be seeing
you
the metaverse come back.
you telling me I got to sell my condo in the metaverse that I bought in 2020?
Bro, people buy rocks in the metaverse.
Oh my God. What a wild time.
No, man, a lot of people wash money through that thing. Like there was a lot of drug dealing happening during that time. I guarantee you
Yeah,
that.
that was definitely a lot of money laundering.
But anyway, though, with that being said, man, this is gonna we're gonna end this right now. But overall, man, like we talked about all of those different stories when it comes to AI, it just gets bigger and bigger and bigger. And if you do your own research, you will find some really, really good gem in there. You know what I mean? And like I keep saying, like the tentacle just gets bigger and bigger and bigger and longer now. So you just got to figure out where is the next stop is going to be. But with that being said, this has been Wall Street Rundown. Stay sharp, stay disciplined. Remember, man, markets rewards people who understand where the world is going before the headlines catch up. Go look at Intel. We'll talk to you.